We'd like to talk about REITs on this show, real estate investment trusts. I know that you love digging into the space for your services with Million Acres, real estate winners, etc. Uh, there was a headline here: mall owner Washington Prime, one of the latest REITs to file for Chapter 11 bankruptcy. And just an interesting backstory there with Washington Prime, where it ultimately, where it originally came from. But we wanted to hit this from two angles, I think, really, because first and foremost, we just talk a little bit about Washington Prime and what really prompted this. But then also, generally speaking, with REITs, I mean, what were the signs, or were there signs that this was coming? And are there things that investors can look out for when it comes to real estate investment trusts to make sure that they avoid getting involved with a situation like this one?
Yeah, well, it's a really interesting dynamic with retail real estate in specifically right now. Um, Retail, this is really highlights how much quality matters in the retail space. You could buy an industrial REIT that has maybe some older warehouses. You can get an office REIT that has some older office buildings, and they could be okay. With retail, the quality really matters here.
Yeah.
Washington Prime has about 100 shopping centers. These are not A malls. They're not the A quality malls. This is not the big, destinations. And simply put, the impact of COVID is too great. Do you want to tell them where they came from, or should I?
Well, I wanted to let you do it. I mean,
Okay.
you're the guest here. You
Um,
know more about this backstory than I do. So yeah, give our listeners an idea of where this
yeah.
originated.
So Washington Prime came from Simon. They were a spinoff of Simon Property Group in 2014. Simon is the A malls that I was just talking about, the destination centers.
And a
They,
REIT that you like, you've talked about on the show plenty
and
of times.
a
You're a
REIT
fan
that
of
I
that one.
own, that I would
Yeah.
recommend, I am a big fan of Simon. That's best in breed. Um, they probably got rid of these assets because they weren't the best assets and they
I
didn't
was
want
gonna
them
say,
anymore.
this was just an investment decision on their part.
And it turns out a smart one. So,
Absolutely.
I mean, the impact of COVID was just too great on Washington Prime. Simon not only has the top quality properties, they also have a top quality balance sheet with a lot of liquidity, a manageable debt load. Because they have such quality assets, and have such a great track record. Their cost of capital is much lower than its peers, which allowed them to make it through the tough times better. So here, listen to this statistic. Simon's rental income was down 10% year over year in the first quarter because of the COVID pandemic. The first quarter of 2020 was mostly normal, and especially in terms of retailers paying their rent. Things didn't
Yeah.
really shut down until late March last year. And Washington Primes was down 13%, pretty similar. So both were down around 10% when it comes to just rental income. 10% of the tenants couldn't pay their rent in the first quarter, whatever. Simon was still very profitable. Their FFO, funds from operations, which is the REIT version of earnings, was down 11%, pretty much in line with their rental income. Rental income dropped by 10%, earnings dropped by 11%, to be expected. Washington Prime's rental income dropped 13%. Their earnings dropped 55%
Wow.
year over year. The reason is they have a higher debt load, higher cost of capital, and it's not as high quality. And that's really what kind of is that difference tells the whole story. Well, not really the whole story, but I mean, there's a lot behind the scenes that goes on with these bankruptcies, and their debt just got overwhelming. Their cash flow in the first quarter was down to 3.3 million versus 10 million in the first quarter of last year.
Wow.
That's a big drop off.
That is.
So they're not making enough money to cover their obligations. It's just an ugly situation. This was very anticipated. For a company to declare bankruptcy and their stock's only down 20% today, that means it was pretty much a question of when, not if.